and thanks everybody for being here this afternoon and giving us the opportunity to talk to you about the Canadian Co-operative Investment Fund. I'm going to talk a little bit about what the fund does, its origins, and the way we're organized, and then Heather is going to take you through some examples of investing or lending that we have done, and then we're going to open it up for questions from all of you. So, just to start with, since I get to speak, I can actually tell you where I am. I'm in Eastern Ontario today on lands which are the traditional territory of the Mississauga Anishinaabe Nations, otherwise known as Mississaugas, in an area that it was subject to an early treaty, a 1788 treaty called the Gunshot Treaty, and then subsequently subsumed by something called the Williams Treaty in the early 20th century. The Gunshot Treaty is purportedly a treaty that covered the lands that were on the north shore of Lake Ontario at the distance of which you could hear a gunshot from the shore of the lake. So if you were wondering how that term ever came about. Heather, maybe we can flip over and I'll just stop right in and talk a little bit about CCIF.
Sounds good. Can everyone see the screen okay? The deck that I'm sharing? Okay, sounds great. I'm Heather Tanaka, Director of Lending at Newmarket Funds and CCIF. I am joining you here from Vancouver, so Squamish, Lillooet, Musqueam territory, and really happy to be here and to meet most of you.
Okay, can we flip to the first slide? Yes, great. So we are an investment fund. It was a fund that was launched by Cooperatives and Mutuals Canada, was really sort of the entity that instigated the creation of the fund, and it has brought together what are now about 18 investors, all cooperative organizations, federations, or cooperatives themselves, with the exception of one investor, with the purpose of creating a suite of investment products or lending products that would support the needs of cooperatives in particular. The fund is a $25 million fund, so it is not obviously targeting very large cooperatives who generally access other financing and financial structures to be able to support their operations, but really everything from new cooperatives or cooperatives under development right through to mid-sized cooperatives. And the idea is to offer capital which is more flexible than might traditionally come from financial institutions. We generally say we lend between 50,000 or invest between 50,000 and 1.25 million. We tend to what we have learned is that 50,000 is probably below what we normally lend out. There are very few investments that have gone out at that level, and we have on a couple of occasions gone over the 1.25 limit. So those are not hard parameters, although we tend not to really look for very small investments at this point. And we do have some flexibility to go higher in terms of the total amount we can invest with any one particular cooperative, even if it's in one or more transactions. It says on the slide we've lent 4.1 million. In fact, we've rolled about 12 million out of the fund. And obviously that's a fluid number because we lend and invest and we get return on the capital, so that number moves around a fair bit. Okay, Heather. The fund objectives are really, established at the outset to meet capital needs that weren't really being met or well met by other financial institutions or other providers of capital. So that really was, how did we become additive to the credit union system and other lenders who had been supportive of cooperatives, and how could we create opportunities for financing that would otherwise be difficult for those same financial institutions, which are governed by and subject to regulatory environments, which often try and create some limits around their flexibility and how they can structure lending. The CCIF, as you'll see, is a cooperative, and the cooperative itself is in the process of amending its investment policy. It's going actually to the investors in the fund in a couple of weeks, with the strong likelihood that we will be able to get clarity that we can move up to the 30 at some time. 30% of the lending can be unsecured. So there is a desire, obviously, on the part of the board to try and respond to what we found in the marketplace, which was a desire for capital, but that could not always be secured either on assets or other ways, such as revenues and so on. So there's a willingness to take greater risk, and there's a willingness to take risk on startups. So that while we have done some startups, there's now a very explicit mandate to be able to do that, to work with co-op developers in being able to support new cooperatives. And confirmed in the investment policy, something we have done on a couple of occasions, which is to finance 100% owned subsidiaries of cooperatives. We have encountered cooperative structures where the actual business entity or the operating entity of the cooperative is not necessarily the cooperative origin, but a 100% held subsidiary, which could be a not-for-profit entity, and we are able to finance those kinds of transactions. I would also say that the fund is agnostic in terms of whether it's it has to be a cooperative and a bona fide cooperative and demonstrate support for the cooperative principles. But beyond that, whether it is structured as a not-for-profit cooperative or otherwise is not really of concern to CCIF. Heather, thanks. So what do? For the most part, we are lenders. So we have, as you'll see, provided working capital loans, lines of credit, bridge loans. We've financed equipment. We've done capital improvement loans. We do some mortgages, in particular around financing for cooperative housing initiatives and projects. In those areas, we tend to do more front-end financing than takeout, but we've done a bit of both. We've done some hybrid financing, so revenue or cash flow linked loans. We have done one loan, I think, with graduated interest. So we have flexibility to structure the loans in relation to the cooperative enterprise and the business that's there, rather than force a singular or a limited set of models on a particular cooperative. Obviously, our biggest concern in lending is what is the capacity and ability to repay, and what is the risk, and what is the risk on the business plan. And then we have not yet done an equity investment, although we have a couple in front of us, which are the mechanism is the acquisition of preferred shares as a way of injecting equity capital into the cooperatives and allowing the cooperative to use that equity to build out its business. The CCIF I mentioned, is a cooperative, so it is structured as a limited partnership. So a limited partnership is a structure which is a common investment structure in that it brings together investors into a partnership, and it is governed by a limited partnership agreement that sets out the terms of the investment, the duration of the investment, if it's time limited or evergreen, that is perpetual, how it will be governed, and what decisions will be made by the general partner. Limited partnerships are governed, if you want, or operated by general partners, and the general partners carry the liability and therefore the responsibility, although it is, to some degree, circumscribed by the limited partnership agreement. The limited partners do not carry the liability for the investments that are made or any actions or decisions made by the fund. So it's a fairly common investment vehicle and a way of bringing investors together in a particular mission that they're interested in. The general partnership is a cooperative, so the Canadian Cooperative Investment Fund general partner is a cooperative itself. It has on its board five of the investors. Two are sort of assigned seats to the two largest investors in the fund, have assigned seats on the board. One director from among cooperative developers, one from among the investees, and all investees that receive capital from the fund are required to become members of the cooperative, and one seat is taken by Cooperatives and Mutuals Canada. And that general partner then hires the investment manager. It oversees the relationship between the limited partners. It makes sure that it is compliant with the terms of the agreement, and so on. And in this case, the investment manager that was selected to work with CCIF is New Market Funds. So there we go. So New Market Funds, just so you understand, is a form of hybrid entity. We're sponsored. Our creation was sponsored by five charity or foundations, charitable entities that span pretty much the breadth of the country, although nobody on the East Coast, and a social enterprise platform in Quebec called RISC. Those entities came together and created a charity called New Market Fund Society, and that charity in turn caused the creation of New Market Funds Inc., which is an impact investment platform. The ownership of New Market Funds is 51% the charity and 49% the team the eligible members of the team that inhabit New Market Funds. And we currently operate six funds, or oversee and manage six funds. Two of them are not particularly articulated here. New Commons Development has two small investment funds that were used to support its work in developing affordable, permanently affordable housing. So New Commons Development works with nonprofits and cooperatives as a development manager and construction manager. New Commons works across the country. New Market Funds operates two funds which invest in both the development and the acquisition of permanently affordable housing. So it provides equity, patient equity that invests in those particular initiatives, and therefore supports the sectors in being able to access other capital. We are managers of Community Forward Fund, which is a lending fund targeted to nonprofits and charities, and we operate manage the Canadian Cooperative Investment Fund. Community Forward Fund, when it at inception did lend to cooperatives, but when we brought on the management of CCIF, we agreed with CCIF that Community Forward Fund would not invest and lend to cooperatives unless CCIF didn't want those transactions, and Community Forward Fund felt they were okay. So CCIF has become an important part of the platform and the work that we do. Heather. So that gives you a little bit of background. Happy to answer questions when we get to that part. Heather's now going to take us through some of the examples of the work we're doing, and hopefully that leads to some conversation around any questions you have or any comments you may have on what you're going to hear today. Heather.
Thanks, Derek. So I've got a few examples here, and I think Derek's already alluded to this, but I think the points I want to drive home are just a couple of things that you'll see consistent throughout these examples. One is just the fact that we provide really flexible capital, and you'll see that show up in not only the length of the term, but also things like interest-only payments for a certain amount of time, just to get through some cash flow gaps that organizations typically have at the beginning of their projects. And then also security. So our capital again is patient, and I think the security you'll see oftentimes like best case scenario would be an example like this with Compass Nova Scotia Co-op Homes, where we take a first mortgage, but oftentimes we're able to be flexible insofar as taking a second mortgage or a GSA behind their senior lender in some other instances. So first example is Compass. I think I saw several of you here from Nova Scotia, so perhaps you'll be familiar with this project. But so Compass is a nonprofit co-op to address challenges faced by housing co-ops in Nova Scotia. So it was created because many smaller housing co-ops in that province struggled with financial sustainability. And also governance and kind of recruiting board members just kept coming up with these co-ops and managing maintenance and repairs as well. So this was a co-op created to consolidate a number of these smaller co-ops to improve these issues. So originally Compass had engaged New Commons. So if you recall the structure that Derek pointed out, so that's our nonprofit community real estate developer in just the development of this project. So we helped support this project by creating a new affordable housing complex. So this was centrally located in Halifax and consisted of 2 buildings with 57 units, all of which are affordable at 75% of median market rent. So we were really proud of this project. And in terms of the loans, we did 2 loans in total in 14 months, and then took a first mortgage on the property as well. And so you'll see here also, just in terms of financing partners that we often work with. So with our work that we do through New Market Funds and New Commons Development, we're highly familiar with CMHC and partner with them often on these projects. And then in this case as well, we worked with Housing Nova Scotia. Okay, so this is a fun one. So Chope Angus is a brewery, a microbrewery and restaurant located in Montreal. And hopefully for those of you in Montreal, maybe you visited this location. But this was a co-op established in 2019. So this is a multi-stakeholder co-op. It was really interesting. It really fit well within sort of the social economy values of Technopole Angus, which is the entity we were working with. So the microbrewery belongs to its employees. So it's an employee co-op, people and community. And then it really enabled in this structure a more democratic model for that management of the co-op. So for this project in particular, it was supposed to start in 2020. So really tricky timing in terms of COVID. And that project was delayed for another year. So we were able to work with the organization and create not only the the restaurant, but actually come to swoop in a little bit when they needed to extend the financing. So we were able to support in this case with increased project costs, resulting in that second tranche of financing. And in this case, we were working with Desjardins and then took a second charge, GSA general security agreement over all of the assets, and then kind of specific charges over certain equipment. And Kyle, I'm just looking at you for timing, just in terms of, do we have a couple of extra minutes for one more example? Okay, perfect. I will go to Boomerang. This is also a really interesting one. So Boomerang is kind of a recycling organization that recycles residual cereals from the brewing of beer into a local and very nutritious, eco-responsible flour. So we were able to support this organization with a $75,000 working capital loan. And you'll see here, just with the term on here, we were able to do 6 months of interest only period. Oftentimes, there's really this kind of gap that happens in operations when they're setting up, where they needed to have a bit of that interest or that principal payment relief. So we were able to do 6 months of interest only payments. In this case, we were walking with Case Économique Solidaire and Risk. again and took, just in terms of security, a first charge over really specific equipment that they were using, and then a second charge GSA behind case. So yeah, I'll leave it at that. There's one more here, Artscape. I can really quickly go through that if we have time. Okay, so this is another location. This is in Toronto now for all you Toronto folks. So this was a pretty big one in terms of loan size. It was a $1 million renovation bridge loan plus a $1 million amortized loan. This was done over 6 years. And had a 20-year amortization, which is quite typical for some of the loans that we do when it's with respect to develop renovations. And then in this case, we were working with First Ontario and then Alterna Credit Unions coming in second behind Alterna, and then upon renewal, after First Credit Union, First Ontario Credit Union.
All right, fabulous. Thanks, Derek. Thank you, Heather. Tons of good information. We love examples. So we always want to hear. We always want to hear more examples. I
I
feel.
think the bottom line too, and Derek kind of alluded to this, is like no deals are going to look this. No two deals are going to look the same for us. So they're often highly complex with entities coming together to create co-ops, or we've got one in the pipeline where they're in the process of converting to a co-op. So we're able to be creative with the structuring, so long as we can see that propensity to repay, of course, with the debt servicing of the organization.
Very cool. All right. Well, yeah, I appreciate the information so far. If folks do have a question for Heather and or Derek, or want to learn more about CCIF, please do drop the question in the chat or use the raise hand function. Because I'm hosting, I'm going to go ahead and take the first question. Before a co-op approaches CCIF, what conversations would you recommend they have, or at what stage of a co-op's development, if it is a startup, should a co-op be at before approaching CCIF?
Derek, do you want to take this, or you want me to go for it?
You can go first. Go.
Okay. I think, yeah, I mean, the main things we want to see are, if you do have a history, an operating history, seeing your financial statements, just to understand the ins and the outs. And then also an overview on the project would be sort of the main thing. Oftentimes these co-ops are newly formed entities, so it's not always possible to get that operating history, but definitely, like, if possible, a deck on the project, or if you've oftentimes, like, organizations have submitted grant proposals and whatnot. So anything kind of equivalent to a deck with an overview on the project. And then budget, of course, as well. Derek, I don't know if you have anything to add to that.
No, I think that's great.
Okay.
I see a question in the chat that asks whether we've partnered with the Community Futures organization. And the answer is for CCIF, no. Although we did have the opportunity to present to the Community Futures annual conference, and we had some nibbles after that, but no firm transactions resulted from it. But there would be nothing. It would be great to be able to do that. That would extend us. We sort of, I'll say this in a way which I'm trying not to offend anybody on either side of this, but urban markets are often more approachable because they sort of, we're more proximate to some of them, and sometimes easier to access, and we're really interested in trying to find whether we can get out into more rural and smaller communities and extend the funds reach that way. So Community Futures organizations would be natural partners for us.
Haven't had one yet.
Haven't had one yet, exactly.
Coming. It's coming. Hey, we have a question. JP, fire away.
Hi. I'm assuming the answer to my question is an obvious no, but I I thought I better ask. I've noticed your community fund on that, and with respect to startup rural nonprofit co-ops, usually the biggest challenge is initial operational funding.
Mm.
And is there anything just the word community is what attracted me? Is there anything in that aspect that would allow you to provide operational funding?
So, I mean, we recover the capital that we put out, and there's a cost to it. If we found a structure and an opportunity where that was possible, I don't think we would certainly think about supporting operations as much as we would capital. And as you pointed out, the fund is now willing to take more risk, sort of in unsecured lending and so on, but it's still a loan, and there would have to be some, there would have to be some visibility and recovery, revenue generation over time that would allow for the repayment of the loan and the recovery of the investment. But
Could we use a confirmed grant that may be payable over time as security for bridge, some sort of bridge
Yep.
aspect?
We have done bridging, and we're not unfamiliar with that sort of approach, so I don't know
Okay.
that would get in our way particularly.
Yeah. Thank you.
So there we go. It was a maybe.
Yeah.
Fabulous. All right, thanks, JP. We have another question in the chat. This one's from Dan and Carol Oler. We are a local investment co-op, very rural area, collecting local capital for projects, so far without any external financing. Are there any guidelines for what you need for skin in the game or down payment for a real estate project to build multi-family housing? So I guess if their co-op was investing in multifamily housing
Yeah.
and they want to work with CCIF to expand the capital they have access to.
Do you want me to go, Heather? Or do you want to?
Yeah, you could go for it. Yeah.
So, I mean, we have financed housing that where there is, for example, that is likely to be financed or supported by other government programs, but where they don't have confirmed funding yet, or their applications have been approved, but the funding doesn't flow because they're not at a point in the project where that funding is targeted to flow. So we've done bridging on the front end of projects. And they're not necessarily projects that require skin in the game. They just require some certainty or some relatively high probability that the funding will flow at some point in the process, and we can understand the timing of that and how repayment will happen inside the project. So, for example, the project in Halifax, there was no particular skin in the game other than the co-op had secured a commitment from the federal government for the land, but it hadn't actually been transferred to the cooperative at that point. But they needed to do the pre-development work in order to satisfy the conditions of the transfer. So the pre-development, part of the pre-development was financed so that the transfer could happen from the federal government. I don't know, Heather, if you want to add anything to that.
No, I think also just I mean, we always think of things from a security standpoint. So the ultimate goal is to make sure that you have the ability to service the debt. So I think a down payment is one way to show that, but also just through the cash flow of the organization itself. So it's not necessarily, and it's often not a black or white answer. It's like I mentioned before, every deal is different, but that's one way to show kind of your propensity to repay is having that down payment, but there's other ways that we can be flexible.
A question from Dustin. Fire away.
Hey guys, I guess I heard at the beginning that you will consider funding a startup, and we've created a small, I guess it's a locally stored data social company, so people can basically have cloud storage and that type of thing. And we've created it. We have a couple hundred members. We have a little bit of income coming in, yet now it's like we need to expand our hardware and also take on employees. So I guess my question is that something that you feel just knowing that basic information because I've started to make some pitches, of something that you would fund, or is it a little out there, or it's
I mean, I'm always interested in the out there. So, I don't know. I don't think that makes us shy. And it was, at first glance, I would say that would fit the definition of a startup. To Heather's point, we'd really want to see what does your plan look like, and does it seem realistic, and is there, what's the probability that this is going to work, and could you demonstrate that to us? But the whole point of, the board wanting to focus some of the capital on startup was in fact to assist getting new cooperatives up and off the ground. And, if you're new and just starting, you probably don't have the typical characteristics that a financial institution would look for. So,
Uh-huh. Great. And so I guess my
I
next
mean,
step would be,
Heather should answer this because she's in a past life done this sort of financing. So,
Yeah, I mean, I think honestly, I would say, Dustin, let's talk directly after, because I think there's so many nuances with every deal, and I think happy to chat with you directly after about the project itself and what you're looking for. But I would say, yeah, I mean, like, bottom line is we want to make sure that the co-op is set up for success and able to repay the loan, however that looks. It's oftentimes looking at the income that you have coming in, whether that's through grants or through the operations of whatever it is that you're proposing, and making sure that you can service that debt with a little bit of buffer. So that's the bottom line, but obviously it would be great to connect directly to see what you're up to.
yeah, perfect. What's the best way to get a hold of you?
We've given our contact info. Maybe Kyle, you can share it after. It's just the last slide of that deck.
and you can find us on the web too. So.
Nice. Okay. Yeah. Well, could you just even pop your email in the chat
Sure,
just so I
yeah.
can
Yeah,
snag it right
sounds
now?
good.
Yeah,
Yeah.
great. Because I'd love to
And
have a conversation because we're just at that point where it's like it could really blow up and go this way, but it's like when you're providing such a high-end service, it's like it's gotta have, I guess it's just it has to really work and has to have staff and just be rock solid. And so
yeah,
yeah, perfect. Let's chat.
and yeah, and I was gonna say, for anything deal related, like if any of you want to contact me, just make sure you contact me, not Derek, because he's got enough emails coming in his inbox.
That's a polite way of saying I'm slow at responding.
Hey, appreciate the question, Destin. We've got another one here from Sheila in the chat. Our credit line's a normal option. We have travel on a Heritage app. We are rebranding and we'll do it in steps to ensure all upgrades are listed. So does CCIF,
Yeah,
I guess, offer a line of credit?
I can take that one, Derek, if that's
Mm-hmm.
okay. Like, I think we're not set up like like a credit union or banking, that we're not a deposit taking institution. So like having a credit line isn't really a function that we're set up for. But with that being said, we have kind of like line of credit-esque products, like for example, like a loan that you can prepay with no penalties. So there are ways of getting around that. So again, coming down to having flexible capital. So it's not a line of credit in the traditional sense, but we can kind of set things up so you're able to access the capital and then repay it for no prepayment penalty.
Yes.
Derek, do you want to add to that?
Nope.
Okay.
Another question in the chat from JP. What's your average turnaround time once you've received an application?
You know what? We're pretty efficient right now, I would say. But I mean, when you kind of think of a deal from start to finish, give yourself like at least 2 months from the moment you call us until you're actually your target kind of closed. But I would say like more generous is better, especially if oftentimes these are more complicated. But I think we're able to turn around deals like quickly, but that's if all of the information is there and there's not a whole lot of back and forth. So you always want to give yourself a pretty fair buffer. So I would say like between 1 to 2 months from start to finish for a deal.
Okay, awesome. That's pretty quick. I'll maybe ask a
Although
follow-up
I will
question.
say we have one right now that's probably going to be like a less than a 1 month turnaround. So it just depends on
I was just
the
going to say
case.
there's exceptions on both ends. But
Yeah,
we've been doing some really quick ones lately. So.
yeah.
Awesome. I have maybe a follow-up question on that, just because I work in the development space too and know that not all ideas that come through the door are good ones. What are some of the challenges co-ops face while working with CCIF? Are there things maybe like other co-ops can take as learnings to better prepare before submitting an application?
I can start. I think one is if you kind of think about like, unless you're an already established co-op looking for capital, what I've observed is oftentimes groups get together and start their own cooperatives for many different reasons, but oftentimes like that's not their only kind of venture that they have going on. Either they have their own full-time jobs or they don't have much of a history of working together. So I think making sure that you like any kind of venture that you're starting and borrowing capital for, make sure that you understand the people who you're working with and their capacity to like drive these projects forward, because oftentimes it's not the only thing that people have going on. And that you have a good working relationship with those people and understand what role you'll each play and your accountability in doing these applications.
Yeah, I might add simply, I don't think there's a single challenge, but it depends the sector you're operating in or what your business is. So if you're building a cooperative housing, it's a fairly well-trod path. There are very specific markers. Pro formas have a certain set of characteristics. You have to, so they tend to look the same, and there's a sort of a more predetermined format. If you're looking at a services or retail cooperative, then you really have to, demonstrate an understanding of the marketplace you're operating in, and the soundness of business plan and the soundness of, the financial projections and so on, which is not, it's obviously important around the housing. It's just each one of those tends to be more bespoke than the housing performers, which tend to have a lot of similarity one to the next. So it depends a little bit on what you're tackling.
Hey, yeah, great tips. Let's see. I have a question come through the chat. Do you have experience helping co-ops navigate the interplay of diverse funding streams, for example, using grant funding to pay down loans? Is this sort of dual stream approach is common? Do you offer any guidance around that when working with co-ops to set up their loans?
I can start, but Derek, feel free
Hmm.
to top up because you've probably seen more deals over the years. But I think yes, like I mean that's often a reality of co-ops and not-for-profits is having those, the reliance on grants in order to pay down debt. But I would say like, I mean, again, as like lenders with fiduciary responsibility to make sure you can repay your loans, like we would really want to make sure that those grants are confirmed and coming in, and scheduled to come in, and have like a clear idea of when that payment is going to be received to pay down the loans.
Yeah. So I mean, we obviously recognize there's an interplay in those places, and there are certain business models that require, where there is a history of grants and they've come in on certain things, or a history of program, contractual relationships which have periodic payments and that sort of thing. So we've often worked to bridge through those. But to Heather's point, for us, we just have to be able to understand and confirm what that really looks like and how realistic that picture is in front of us.
Hey, fabulous. We have another question here in the chat. They're looking to set up an investment fund for investors. They're starting an eco panels manufacturing and are building a facility to create eco panels for affordable housing. Is that something that could work with CCIF?
So maybe I guess there are two separate questions. So one is, would we fund an investment cooperative? I mean, generally, I think that's what the question is. So is it around whether we would provide capital for an investment cooperative? We've never been asked that question, so it would be an interesting challenge for us to think about how that might work. We're not really set up to be an investor in other funds, but if there were around particular kinds of cooperative investment cooperatives, if there was a bridging need or something like that, I suppose we would have a look at it. So, encourage somebody to get in touch with us and explain what the approach might be. On the eco panels, I don't recall the contact having been made, but that it would be like, I think, Heather, any other cooperative that approached us, we would look at the transaction on the merits of that particular transaction. Does it, from our perspective, hold water and make sense? And be happy to think, how we might be able to help come and be part of financing.
Yeah, and I would agree and just add it's like any business, we would do our due diligence, especially if this is a brand new company, on making sure there's a market for this and there's a business plan that makes sense prior to providing a loan for this. But yeah, happy to chat more. But yeah, no, I don't recall receiving that inquiry, but just feel free to contact me directly.
Fabulous. Looks like we got a question from Adam. Adam, take it away.
Thanks. I'm just not sure if I missed this, but on the terms of some previous projects that you've done, can you give us an idea of the interest rate that was applied to some of those loans?
Yeah, so there's a range, obviously. At the low end, we've put some long-term, highly secured debt out at 4.5, and we have done some much less secured and much higher risk lending up in the 8s and 9s. So there's a range in there. I don't think we've ever put any money on above 10. Our average lending rate in the fund right now is sitting around 6.5. So it's a gauge that sits around that sort of benchmark, and you can think about it in those terms. Obviously, investments that are, well secured on the capital side, where security is likely to be recovered, attracts a slightly lower rate. Where if we're just doing a GSA and there's no real security, we'll tend to price risk a little more risk into it. But then, to be clear, the board has an expectation that where we do startups, which is probably the pointy edge of the higher risk stuff, that we hedge some of that risk on across the portfolio, and we not try and price it all in there.
Thanks.
I'm going to come in with another question I've got prepared. Based on the conversations you're having with emerging co-ops, what sectors do you see a lot of growth in, or where is the demand for capital coming from in terms of the areas where co-ops are operating?
I can start. Yeah, for sure.
Right.
I mean, I think, we have like an obvious tie to affordable housing with the other platforms that we have and other funds that we have at New Market Funds and CCIF. So I would say we get a considerable amount of interest and deal flow through that just relationship. And then I would say, like, I'm definitely seeing worker co-ops lately. Just on that note, like, I have seen one investment co-op recently that's quite newly formed. The request was less for investing into the co-op and more for investing into a project that they were doing. So it was kind of outside of the actual investment co-op. Trying to think of what else.
Yeah.
What have you seen, Derek?
Yeah, well, I mean, housing, not just to tie in with New Market Funds, but the federal government has launched co-op specific financing and programs. So there's more uptake now and more general, ability to finance cooperative housing starts. I think we have seen, we have yet to see transactions, but more inquiries on energy and cooperative energy initiatives. So I think if we have to look at a growth area, I would say that's one of the ones that we think will come in the future for sure. And we have not done anything, but in some of the work we do elsewhere, we see food systems and sort of points of intervention in food systems where I think the cooperative sector is likely to grow again, in the small scale agricultural intervention. So.
Yeah, very cool, very interesting. Any other questions from our audience today? Feel free to use the raise hand function or or drop something in the chat. Okay, we've got another question from JP.
Sorry, me again. Um, as co-ops are regulated provincially, is there any, in your experience, any significant differences we should be aware of depending on the province that we live in when it comes to dealing with your office?
There's
Do you mean oh, sorry, go ahead.
no, go ahead.
No, just like, do you mean insofar as borrowing money?
Yes. Like, I mean, I'm cognizant of Saskatchewan's and BC's, but I have no idea what the legislation is in Quebec and Ontario. So in your experience, is there any detriments or impediments depending on where you reside?
No, I'm trying to think. I think we've loaned in 7 provinces, and there's never been any issue raised or any challenge. We've loaned to a Quebec Cooperative Federation to expand into Ontario and Newfoundland, and there were no impediments there. So I really don't think the regulations tend not to restrict access to capital by the cooperatives in that particular sense.
Okay,
I think it
thank you.
would be more so like related to if your co-op itself was trying to raise
Mhm.
capital, like out on the private placement market. That's when you run into
Yeah.
the provincially, minded restrictions with your securities commission.
In the chat, Matthew asks, is there a way to download the slide deck? Heather, Derek, would you guys be
Sure.
okay with me sharing that?
Yeah, I'm going to make one correction. I'll send it back to you, Kyle, and then you could, happy if you want to distribute it to all those who signed up for the webinar.
Okay, fabulous. And maybe just as a closing question here, I'll ask if someone's interested in investing in CCIF, potentially one of the co-ops here on the call, or working with your team, how can folks get more involved?
Heather.
Yeah, I mean, we will very shortly we're building another fund, which is not co-op minded. It's more a continuation of that community forward fund. It'll be called something different, but we'll be coming to market for that in the next quarter. So if there's any interest in, and that would be sort of like at a higher level, it would be a $30 million fund approximately. So if that's of interest, we can definitely chat. And then with CCIF, Derek, correct me if I'm wrong, but I think we're just actively taking investments for that. It's an evergreen fund.
Yeah, I mean, we can, to finish the target raise on 25 million, there's about 2 million left to raise. That 2 million is bridged currently, but there would be, if somebody were interested in investing, we would be happy to talk to anyone about that. We can raise about another 2 million on this particular this iteration of the fund, and then it will be probably a couple of years before we open up for another round of investment.
Fabulous. Seeing no other questions in the chat other than someone saying, give us 5 years and we'll
Give
be
us
in
5
touch.
years. All right.
I think we can end it there. Derek, Heather, thank you guys so much. We really appreciate you sharing this information. This is a fantastic resource for emerging and established co-ops throughout Canada. And so, yeah, I definitely recommend checking out their site, reading some of the success stories. It's really good work they're doing at the CCIF team. So thank you guys so much.
Well, thank you for the opportunity to come and talk to you about CCIF. And if, as Heather said, you have any questions whatsoever, curious about anything else, get in touch.
Fabulous.
Thank you.
All right. Thanks, everyone, and thanks for coming out this afternoon. Take care, and we'll see you again soon.